Well, good evening, everybody. It is freaking cold in my house, but I am not going to turn on the heat. Oh, no. I need to save money because now I'm poor, baby. I need money, 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 money. Anyway, welcome back to Strongman Personal Finance. We have a sponsored video today. That's right. A sponsored video is when a member of my channel sends me $45 or a non-member of my channel sends me $50. See the pinned comment below. It's a very easy process. Anyway, when you want a video sponsored and you send me the appropriate amount of money, depending on your membership status, I will react to whatever video you want me to react to or talk about whatever topic you want me to react to within reason, obviously. Anyway, in this sponsored video, we are going to find a way to apparently save money on crypto taxes because a lot of you, because you're such geniuses, you're heavily invested in cryptocurrency, which is fundamentally worthless. But since you bought it and it went up a lot, you might consider selling it. But there's a problem when you sell cryptocurrency or anything. You pay lots of taxes. So this guy that we're going to react to apparently found this genius, albeit very complicated way to save money on crypto. All right, let's go ahead and react. So we got how the rich sell crypto without paying taxes. Now, I know that I've seen this guy before. He is legit. Excuse me. Oh, I'm snotty. He is legit. I think he's a CPA. I'm pretty sure I've reacted to some of his videos before. So I take what he says with a little bit more of a grain of salt than the average YouTuber when it comes to taxation. But just keep in mind that a lot of the stuff that he talks about is tax strategies for basically successful business owners, people that have a lot of money, basically. I think what he's about to say here isn't necessarily feasible for the average clown sitting on crypto gains in his Robinhood account. But anyway, this guy, I think, is more legit. I'm pretty sure he's a CPA. So let's see how the rich, which you are not, sell crypto without paying taxes.
Great until the tax bill shows up. But don't worry, if you're sitting on massive crypto gains, there's a legal way to keep them working for you without the upfront tax hit. For example, if you sold Bitcoin or XRP or Solana recently after a big run-up, you might owe 30% or more in taxes. That means a $1 million sale could hand $300,000 straight to the IRS or the state tax commission. But here's the secret the wealthy know. There's a completely legal way to sell crypto and pay zero tax up front while still keeping control of your investments and creating lifelong income. And I'm going to walk you through the whole process step by step so that you can do it too. My name is Mark J. Kohler, CPA, attorney, and best-selling author. And today I'm going.
Yeah, he's a very experienced CPA. Okay, like me, I don't. He's going to talk about trusts. I had to watch the video just to see what he was talking about. He's going to talk about a special trust that you set up. I don't specialize in trusts, so I learned a little bit about how you can save money on crypto taxes in this very complicated way. But I do have some criticisms, as we'll get into.
Going to show you exactly how to reduce or even eliminate your tax bill from crypto gains using something called the Charitable Remainder Trust, or CRUT, Charitable Remainder Unit Trust for short. Stick around, because by the end of this video, you'll understand how to turn highly appreciated crypto into tax-free income-producing wealth, legally and ethically. Let me show you how it's done. First, let's talk about the problem with selling crypto the traditional way. When you sell crypto assets held for more than 12 months, it's taxed as long-term capital gain first. Now, that's a 20% federal rate plus 3.8%, what's known as the net investment income tax plus.
Yeah, I mean, the net investment income tax, that applies to high earning people. Okay, if you're just an average wage earner, you make $95K a year and you're married, you're not going to pay net investment income tax. You might actually pay 0% capital gains tax depending on your income. So what he's saying here is the maximum amount that you will be taxed if you sell something after you've held it for a year and a day. Basically, that's long-term capital gains. They're preferential. They're lower tax rates than buying something and selling it at a profit in the next day. That's called a short-term capital gain. And if you have a lot of those, you're probably a clown and a gambler.
Any state income tax, and that adds up quick. Very well, could be over 30 to 35% in some states. Sell sooner than that, you're hit with ordinary income tax rates as high as 37%. Then add the state tax to that. So whether you're a long-term holder or an active trader, every sale triggers.
Yeah, notice what me Kevin does. He seems to trade a lot. Yeah, he's paying like 50% gains on any short-term capital gains. 50%. Okay, when you combine federal and California, he's getting his cheeks clapped. It's not a good idea to trade. Even if you make profits, a lot of that profit is going to go to tax.
Year's tax, even crypto to crypto transfers or swaps. This is because the IRS recognizes crypto as property, not as currency. So whether you sell it, convert it, trade it, not even moving it back to US dollars, it's a taxable event. So one of the legal loopholes the wealthy use is the Charitable Remainder Unitrust, or CRUT. The CRUT is a special type of irrevocable trust that lets you donate the appreciated assets, the crypto, sell them tax-free inside the trust, then receive income for life. You get asset protection, and the remainder of whatever's left after you die goes to charity. So high level.
So my first question is, okay, so you can transfer it to this trust, you sell it inside the trust, and you get income for life. Well, I would imagine the income that's coming out of the trust to you is going to be taxed. That I imagine, maybe I'm wrong. You usually don't get, there's no like free lunch in tax, basically. At some point, they're going to get you. Okay. So I imagine, so you transfer money into this trust and it's basically locked away for charity. If you change your mind, you're cooked. And as you pull the income out, I imagine you're going to be taxed on that income. So you're kind of deferring the taxes and limiting your options for your heirs so you can save taxes now. That's kind of the impression I'm getting.
Let's go through how it's structured. Then I'm going to take you through 9 steps in detail of how you implement this. So first, you're going to create this trust so that you can then transfer your appreciated assets, the crypto, into the trust. So then the trust, which is a charitable trust, is going to sell those assets tax-free.
Do you know how much you're going to pay thousands and thousands of dollars? You're going to pay, I mean, obviously he's trying to market his business. You're going to pay thousands and thousands of dollars for this in freaking preparation fees. Okay. I don't even do trust. I don't have a lot of experience in trust. I would imagine, I mean, I worked for firms that have had trust returns. Yeah. Paying the lawyer and then paying the CPA to do your trust return every year. Yeah. You're going to pay thousands of dollars for this. Okay. I don't think the average person that has crypto gains, unless they're very high income or have a big successful business, is going to profit from this.
The proceeds stay invested inside the trust, and you receive a fixed income stream for life. When the trust ends, whatever's left, the remainder goes to the charity that you designate at the beginning. Think of it like splitting your assets into 2 parts. The income piece, which comes back to you every quarter of every year, and then the charitable remainder is what goes to charity later on. It's perfectly legal under IRS Code Section 664 and used for real estate, stock, and now crypto. There's 5 big benefits, if not more, you get with the CRUT. First, you're selling the crypto tax-free so that you have a bigger pie or bucket to work with. Number 2, you get an immediate charitable deduction. Did I mention that? Because you're going to be giving this.
I mean, you can just, like, if you have $1 million in crypto gains, you don't have to sell it all. Like, why do we have to put this into a trust and then like generate income back to yourself and then basically give the rest away to charity? Why not like, oh, I need 20K out of the $1 million. Okay, I'm going to sell 20K. Or maybe I'll wait till January 2nd or January 1st of the next year and I'll sell another 20K so I can move the tax burden to the next year. There's different ways to do that. Like this just seems very complicated to me. I don't know. Maybe I'm not a rich person, but I feel like there's other ways that are less expensive with fees for attorneys and CPAs than what he's recommending here. I'm not saying it's bad or wrong, but it seems like it's going to line a lot of pockets and kind of limit your options, if you know what I'm saying.
Wealth to the charity when you die 20 years or longer away, you get a tax deduction today for doing that. Number 3, you receive that income for life. That's the beauty of it with the bigger bucket, is that there's a calculation to give you this stream of income. Number 4 is completely asset protected from any lawsuit. No plaintiff or creditor can get at the assets inside the trust.
Yeah, well, why do you want a stream of income? What if you keep it outside of a trust? You can just generate whatever income you want. You have more flexibility. Maybe I want 20K this year. Maybe I want 100K next year. Maybe I want 50K the year after that. Maybe I want none the year after that. Why do I have to have this steady stream of income? Maybe I don't need the income. You know what I'm saying? And there's other ways to save money. Like, I don't know, you could tax lost harvest. There's a lot of ways you could defer or even eliminate future taxes without putting money into this complicated trust that it's going to cost you a fortune to maintain and doesn't seem to give you a lot of flexibility with how much money you can take out of it. Okay. And then at the end of it, the money goes to your charity instead of to your heirs. Maybe you change your mind later. I don't know. You know, like I like the flexibility. I'm a very liquid, flexible man.
Trust. And finally, if you remember, I said you get to remain the investment trustee. So you can continue to trade and buy more crypto tax-free, essentially. Inside this trust is the value of that bucket goes up. So instead of paying 30% or more in tax now, you keep 100% of it and continue to turn it into lifelong cash flow. Now let's get into the detail and break down all 9 steps of the process. It's important you know this as you work with your tax advisor so that you're very involved and understand what you're trying to implement from the beginning.
I'll be honest, I do taxes. I don't do this. Don't even freaking ask. Okay. The 2 things I don't do, I do every other type of tax, every other state. I don't do freaking trusts and I don't do freaking nonprofits. Okay. Maybe I'll expand to those in the future, but S corporation, C corporation, partnership, single member LLC, disregarded entities, regular individual taxes. I do all that. Real estate, whatever. I don't do freaking trusts. And I don't do nonprofits. Don't even ask, okay? I know I'm a clown, but at least I know my limitations because I don't have experience with it.
Step 1 is we're going to create this charitable remainder unit trust. You're going to work with an attorney to draft it before you even transfer or sell your crypto. Otherwise, the IRS will see the gain as personally yours and the tax strategy is lost. Step 2 is you're going to then donate the crypto to the trust. You may ask, how do I do this? Well, you're simply going to set up a wallet for the trust. You're going to just transfer the crypto, not sell it, transfer the actual tokens into this new wallet. Now, when you do this, it's treated as a charitable contribution. Now that the crypto is in the trust, we're ready for step 3. We're going to sell the crypto and bring it all back to US dollars. Keep that wallet alive and well so that you can do additional trading, but also create a bank account for the trust so that you can fund that bank account when it's time to pay you. But again, the beauty is the trust is a tax-exempt entity as a charity, and it gets to sell all of that crypto tax-free. This means you keep the entire sales amount working and compounding inside the trust. Now, remember that tax deduction I talked about? That's step 4. And so we're going to calculate the present value of what that future gift to charity is going to be after you die. It's based on your age and federal interest rates and things like that. And that present value of the future charitable gift is a tax deduction on your tax return right now. That tax deduction can also offset other income in this same year. So it can go against your W-2 and other income because you would itemize in this given year because of this large charitable deduction. Now the real fun begins.
Exactly. Yeah. So you need to have a lot of gains. Okay. Most people take the standard deduction. It's kind of hard to take it's just kind of hard to itemize. Like the vast majority of people I do taxes for, they do standard. Even people that make a lot of money. It's very, so you better have a lot of freaking gains and the present value of your future charitable distribution, which is just a guess, basically. That better be pretty significant or you're just wasting your time.
Step 5, we're going to do an annual valuation to figure out what your distribution is going to be. Now, the year you form this and transfer the crypto and sell it, that's going to peg the valuation for that year. But every January thereafter, you're going to use a third-party administrator to value the trust. Now, another important...
And all this comes with fees.
Piece in this is figuring out what your payout percentage is. So that valuation we're making is going to be used against this percentage. Now, this percentage is based on your age and gender. It goes to an actuarial table at the IRS. And based on that table, we're going to figure out how long we think you're going to live. I know, not fun. But when we figure out that time period, we work backwards and the IRS says, okay, this is how much can be paid out every year to ensure that something will go to the charity. The older you are, the bigger the payout percentage because they expect you not to live as long. I would think around the average of 10% is when you're age 55 to 65, somewhere in there. So anyway, once that percentage is determined, and we do it once upon the formation of the CRUT, that's going to be used every quarter against that annual valuation. So the charitable trust is going to give you this distribution, which is step 6, every quarter based on the annual valuation every January. It's important to note that that distribution is taxable to you, but it's not the end of the world because
yep, it's taxable. That's what I thought.
Because we have now been able to spread out that gain of yours over time, which will put you in a lower tax bracket. And also...
Yeah, but you can spread out the gain just keeping it outside of the trust. You just don't sell it all in one freaking year. I would never recommend anybody do that. Like if you have this huge portfolio, yeah, you need to spread out your sales. If you have a lot of gains and you're thinking about selling, be careful. You're going to get your cheeks clapped, but you can spread it out. You can just keep it outside the freaking trust. I'm going to sell 20K this year, 20K next year, 30K the year after that, 15K the year after that. You have a lot more flexibility. Okay, instead of locking it away in this freaking irrevocable crud or CRUT.
We have a bigger bucket or pie that we're investing from because we didn't pay tax at the beginning. But those distributions will be taxable to you every quarter during the rest of your life. Now that brings us to step 7. And you might be surprised who's really upset about this strategy. It's not the IRS or the government. This helps a lot of charities, schools, and churches, this CRUT structure. It's the family members. Some of the family is wondering, why did all that crypto end up going to a charity? It should go to us. Well, we want to take care of them too, so we combine the CRUT with an ILIT. It's called an Irrevocable Life Insurance Trust. So
life insurance is generally, if you want your money to go to your heirs, you're probably going to have to buy like some kind of permanent policy, some kind of like permanent insurance policy. And I've sold those before. They're usually pretty grifty. Okay. They usually have super high premiums and the life insurance agent makes a huge commission off of it. Okay. Why not just hold the money outside the CRUT, sell it as needed, and then when you die, it has step-up tax basis and your heirs can inherit it with a stepped-up basis to fair market value. Why do we have to put it in this CRUT and limit our income, make all this complication? And when you die, you could donate to charity at that time. I mean, like this doesn't seem very flexible to me.
Some of that quarterly distribution can be allocated to a life insurance policy based on your life, and it's just automatically funded for a few years until it can sustain itself, and then it's sight unseen. It's just there, plug and play. So as you go on for the rest of your merry life, those payments come out, fund the life insurance, and this trust.
Instead of buying permanent insurance, I'm just going to save as much as I can, and when I die, I'll probably have more that will go to my heirs, instead of putting money into a freaking life insurance product. You're generally, as long as you're not a clown, if you lock money away into an index and you just leave it there until you freaking die, you're probably, in my opinion, going to have more than if you paid a bunch of premiums into a life insurance policy. I mean, not guaranteed, but I think it's more probable that that would be the case.
Trust will pay out to your heirs tax-free outside of your estate. This brings us to step 8, that fateful day when you pass away, and the remainder goes to the chosen charity. This trust will stay in effect for 20 years or your life expectancy, whichever's longer. So if you were to set up this trust next month and fund it with $1 million, those payments are going to continue, and that trust will live on for another 20 years, paying out to your family members until that 20-year mark. Then it'll go to charity. Now, if you live 30 years, then it's going to wrap up on that 30-year mark. Again, your life expectancy or 20 years, whichever's longer. And the beauty of this, you get to name one or multiple charities that you own or control. Could even be a family foundation that you set up during your life. So this charity could really be your family legacy. So that brings us to step 9, that true family legacy concept, because we're really bringing together two things: that tax-free life insurance that goes to your family, but also this charity that you might designate and have family members serving on the board. So this family foundation lives on, carrying out good works in your name.
Self-made millionaires.
While the rest of that life insurance money goes tax-free to the family. This lets you transform what would have been a large tax bill into a lasting income source, a charitable impact, and a generational wealth plan, all within one coordinated strategy. Now let's talk about why it works and why the IRS allows this. The government, who manages the IRS, actually wants to encourage charitable giving. So the CRUT income to you is taxed only as you receive it, not when the crypto is sold. Your donation must be irrevocable. Once we've set up this trust and you transfer the assets, it's over. It's irrevocable, and you must.
Irrevocable. You sure you want that? You sure you're not going to change your mind in 10 years?
Must be committed to the plan. But as I mentioned, you keep control of the assets and over what the trust invests in. It could be crypto, stocks, or even real estate, just passive investments. And the payout rate is based on your age and gender, and you'll know exactly what your rate's going to be against that annual valuation for the rest of your life. Quick example. Let's say you bought some crypto for $200,000 and now it's worth $1 million. That's an $800,000 gain. Now, normally you'd roughly pay about $250,000 in tax, but instead you transfer that crypto into the CRUT, sell it tax-free, and get approximately $100,000 tax deduction. You get to reinvest that $1 million inside the trust and draw approximately $50,000 to even $150,000 per year based on the rate designated under the tables at the IRS. When you pass away, the remaining balance goes to your favorite charity and your heirs inherit a big chunk of money tax-free. That's how you turn a $300,000 tax problem into a lifetime income stream and a lasting legacy. So there you have it. The same strategy the wealthy have used for decades to sell highly appreciated real estate or stock, now applying it to crypto. By setting up the charitable remainder unit trust, you too can sell crypto tax-free, create guaranteed income for life, support a charity you believe in, and protect your family's future. If you're serious about making this work, please reach out to my law firm, KKOS Lawyers, for a consultation. We've helped.
Yeah, go to him. Don't come to me asking about this. Go to him. Okay. So, I mean, it's legit. Seems legit. I briefly looked it up, but I mean, this does not apply to you. Okay. I'm sorry. It doesn't apply to me. It doesn't apply to you. If you're just this average, like, retail dude with a couple, like, 20,000, 30,000 of gains in crypto, do you really want to do this? Is it worth all the fees you're going to pay? Oh, I've got a trust. And it's got like 10 grand in there. And you're paying the freaking trust filing fees and all the attorney fees, all that freaking nonsense. Okay. No. And then it's the matter of flexibility. Once it's in there, it's irrevocable. No, I like flexibility. Okay. If you're a brokey like me, I don't think this is a good idea. Now, if you're Richie Rich, okay, go reach out to him and do whatever. But I think for my fans, because we're all a bunch of VT brokies, I don't think this is necessarily something that you should pursue. That's just my humble opinion. All right, well, that was the sponsored video. Thank you, everybody, for tuning in. If you want a sponsored video, see the pinned comment below. $45 for members, $50 for non-members, and I'll react to basically whatever you want as long as it's not completely clownish and would get me removed from social media. All right, let's do some member-only comments. Alan Carlson, the whiner-in-chief. Oh, first comment, complaining, shocked. As a paying channel member, yes. What discount can I expect for booking a one-on-one consulting? You don't get a discount for consulting, okay? When it comes to tax preparation, no. Or like CPA consulting, you're not getting a discount. You actually put effort into making a video thumbnail. Good job. That probably took you 3 minutes. It took me about a minute with Grok. Grok is pretty good for making thumbnails. GG Forever, did you not read my message the other day? Strongman will blow you off if you don't pay him. That's right. If you want me to answer your comments, you better be a freaking member. But I spent all my money on Jeremy. He's such a genius. I gave him $10,000. Yeah. I don't have money for you, Strongman. Elemental Tamago, still looking for a job, or did AI replace you? Why does Strongman keep posting creepy AI videos short? People seem to like them. I think they're funny. That down Dan won't play off the booze and is claiming stock puts obliterated me, even though I nailed every trade before that. One got wrong and he couldn't wait to bash and Gil, we're not going to believe you unless you publish your portfolio, dude. We're done. We're done. I think he's trying to gain more subscribers by posting shorts. You can get a lot of subs quickly by posting shorts. Unfortunately for Strongman, he doesn't know what quality. He doesn't know quality is necessary. Oh yes, you need a quality short. You know what I want to post? Something I think is funny. Okay. You think a lot of people find me funny? A lot of them don't, but some people do. Okay. The shorts are terrible and cringe and defamation. I would not use AI altered videos of other public influencers. Imagine they make a law. Strongman is opening himself up to lawsuits. Oh my God, it's over. That's a great point, Gil. Those shorts he's making could be illegal. I bet YouTube won't allow them someday. Well, so far they just require you to mark it as AI. So I know I was surprised he was dumb enough to keep posting them. I wonder who's the dumb moron in his Discord. I make them. I use Grok. It takes me 2 seconds. It's almost guaranteed they will not allow that someday. Chris Norland spoke about this and has warned people to not use AI to make videos like this. Chris Norland has been posting better quality content. Can't believe I'm saying this compared to Strong. Chris Norland is a scammer. He changes every year. His channel makes a new direction. I have proven that he was pumping clown stocks, and then he saw the tides were turning, and suddenly he was a grifter slayer. He's dishonest. I have proof. Oh, but his videos, he's got a nice background. Duh! Me, Kevin, where's the suit? Chris Norland was correct about Trump being a dumb, greedy clown. I don't like Chris Norland. I haven't watched his content in over a year, but I believe his videos are. Do I claim to have a high quality? I'm in a freaking bathrobe. Like, you're coming here and saying I have low quality content. Do you think this is like a studio level production? I have a picture of Jeremy plunging a toilet with a clown nose, and I'm wearing a bathrobe. Your content's low quality. Really? This channel's going downhill. Only me and Alan Carlson commenting. I know Gil Strawman needs to share the money he's making from his channel with us. Read the reasons so many are watching. Strongman ignored. Look, you got to be a freaking member. Okay, I'm sorry. This is not a charity. This is a business. This is not a CRUT. Anyway, this was a sponsored video. If you want a sponsored video, you know what to do. See the pinned comment below. It's right down there. You click on the link. You go to where it says sponsored video. It gives you very simple instructions. It gives you payment methods. Send me freaking money, and I'll do whatever you want within reason, okay? What stream is after this one? I don't know. Maybe I'll just do a $10 super chat grift stream or just like a hangout stream. I don't really have anything in mind. Yeah, it's 6:30. I'll probably do a grift stream. Why not? Anyway, like, subscribe, and hang out for the next stream. Cheers!